Hi everyone, my name is Joanna Eddy and I'm the founder of Eddy CPA Advisory and Solutions, a boutique accounting consulting firm that specializes in ABA businesses. Today we're going to look at how you as an ABA business owner can analyze your business data. It is important to think of your business like one of your clients. You should be reviewing the data and often in order to assess if changes are necessary. In the same manner you assess if protocol modification will be necessary for one of your clients. So what I hope you will take away from this webinar is the ability to, one, determine if your data is clean and reliable, and two, what metrics you should be looking at and how to analyze them. So let's get started. Step one before analyzing the data is to ensure it is accurate and reliable. So if you're a BCBA business owner, I don't want you to get worried or expect to know everything that I'm talking about, right? You will likely need to work with your accountant, your business advisor, whoever assists you in making financial analysis to interpret whether your data is reliable. So remember, you went to school to become a behavior analyst, not a financial analyst. And just like we go to the mechanic to help us see what's wrong with our car, there are times we need to seek the advice of professionals in other disciplines during our careers. So once we have determined that we have good data, we'll need to determine what the data sources are. So there are three different sources that I want you to ask yourself, what is your data source for? And the first one is revenue. So ask yourself, what is the best source to tell me what services we were actually rendering during a time period and which of those services were actually billable? Okay, so consider what services you actually get paid for. For example, we all know with the adoption of the permanent CPT codes that happened in 2019, a lot of your indirect work became unbillable. And although you are working, you're not generating any revenue for those hours. We also have an issue with concurrent services being rendered and some payers not honoring the payment for services going on at the same time, particularly the direction or supervision of an RBT. So then you should consider what the best source is for your expenses. Do you have an accounting system or a bookkeeper that gives you reports? How are the expenses tracked? Are the time periods the expenses are incurred properly reflected in your data? And the third source I need you to find out is what is the best source to give you information on how much money is owed to you by your clients or insurance payers, right? Does that source detail how long the money has been owed to you? And is there a process to periodically assess for potential write-offs? So now what I'd like to do is go through an example of an ABA company where we're going to determine the three sources for that company. And I hope that this will help you then sit and look at your company to determine where your sources of data are. So the example we're going to look at is XYZ company. So this is the story behind XYZ, all right? They use QuickBooks for bookkeeping, which they maintain on a cash basis, meaning that when they receive a deposit from an insurance company, they record that as revenue on the day they got the money, even though the services were rendered 3 to 6 weeks ago. Okay, then for a practice management software, they're using CentralReach, which details all the sessions billed and the rendering provider, along with contracted rates by payer. They also log payments received against claims in CentralReach. So when they get a payment, they have an employee that goes in there and marks certain bill time as paid. And for payroll, they're using ADP, a large payroll processor. They're paying their employees bi-weekly for a period 2 weeks in arrears. Okay, so given this story, we're now going to go identify the revenues, so the sources of data. So we'll go back to the slide here. So for revenue for XYZ company, we are going to select CentralReach as our best data source, not QuickBooks. Why? Because on QuickBooks, they're recording the revenue at a much later phase, not when it was actually earned. We'll use CentralReach because it shows us all the activity that happened. And after further review of your CentralReach, we were able to note that there was non-billable activity codes in the software to be able to track what was not going to be billable. We want to look at revenue in the period it was earned, not collected. And that's the most important thing when you're looking at your revenue. Why do we want to do that? Because we want to see the expenses that were required to produce that revenue, right? If we analyze revenue in a period where it was not earned, we are going to compare it to expenses in a period that was not the same. And the matching principle is an accounting fundamental that enables us to accurately assess a business performance. So it's crucial that when you are looking at revenue, you are matching it against the expenses that were required to produce that revenue. So in the same time period. And because of that, we are going to decide that XYZ's company best bet was to look at the revenue from CentralReach and ignore the revenue in QuickBooks. Now, XYZ company is going to see what best source to use for its expenses. And for that, we're going to determine that it should be QuickBooks and ADP. Okay. In QuickBooks, we will do an assessment if there are any timing issues. So for example, if XYZ company paid June's rent on June 1st, and then it happened to pay July's rent early on June 31st, we would end up showing double rent expense in June and no rent expense in July. So we'll need to analyze the QuickBooks for timing issues like these to make sure we don't have a problem where we are doubling up expenses in one period and showing none in another, or if we have any prepaid expenses that it's particularly segregated out to the month that it actually pertained to. For the payroll, we're going to look at ADP because we are going to need to know the information about the payroll periods. In the example that we gave with XYZ company, they pay people 2 weeks in arrears, which means that when the money actually comes out of their bank account, it might not be for that particular period. In fact, it usually won't be, at least part of it, right? So we're going to need to look at ADP to see what pay periods were present and make entries to back out or back in particular payroll. So for example, if there were January dates of service that your therapist worked and they didn't get paid till February, we're going to need those amounts shown in January, not February, when the money actually came out of your bank account. Okay. And for the third source for collections, we are again then going to go to XYZ's CentralReach account. Because as we noted in the example, they told us one of their employees was applying payments to amounts billed out in CentralReach, which would give us an accurate picture of how much money is owed, what claims are open for what clients from what payers. Okay. So one important note before we move on. Everything I talked about in this example, it would be available if you had an accrual accounting system in place. So accrual accounting is a type of accounting. It's the generally accepted form of accounting, but a lot of small businesses, a lot of ABA companies that I've dealt with, they're still using cash basis accounting. So their financials aren't very good to rely on, and they have moving pieces in different sources, and that's why they always have to, in this example, we have to use several sources. If you had your accounting set up in an accrual basis, all this information would be available through the accounting. So I always recommend to ABA companies to convert to accrual as soon as they can in order to have all the information in one place and make it less tedious to have to get these metrics and this information from several different sources. So if you currently don't have an accrual system, I'd reach out to your accountant, see if they can set up a system like this. And if they're not able to offer that services, we offer it here at our company too. So you can always reach out to me. But it's something really to consider, especially as you're growing and need to make business decisions and you need information quickly. Okay, so now we've identified our data sources. What's next? How are we going to know that the data is reliable? So this is one of the most important steps that we talked about to begin with, right? And how can we test if it's reliable? Well, what we can do is we can test a sample of the data. So for example, if we're talking about revenue and you want to make sure the report you're using is right, the report you pulled off your practice management software, you can pick a sample and then make sure that pull office notes to make sure that the sessions rendered actually happened. And then you can even go a step further and make sure that the claim billed out reflected what the session notes said. Okay. Then you want to consider any limitations. Now, for example, again, back to revenue, if you did pull the report, you're going to want to make sure that it eliminated for concurrent billing that wouldn't be allowed. So let's say you have a TRICARE contract that doesn't allow concurrent billing of direction of a technician while a technician is doing direct services. You're going to want to make sure that that data was eliminated for the RBT's time to make sure you don't count revenue that you didn't really earn. And so after you consider the limitations, then you can make all necessary adjustments and clean up to the data. So if you pull the spreadsheet and you determine, well, you know what, I've got TRICARE's RBT hours in here when they're being supervised, and that's not allowed, filter it out, delete them, clean the data, so you can have good data to work with. So after you identify your sources, you want to go through these 3 steps to make sure that the data is reliable. Okay, so now that we've determined our data sources and we've considered whether it's reliable, we can move on to looking at some key metrics that I like to look at for ABA companies and I think are really helpful. Okay, so those are going to be lag time in collection, AR aging buckets, write-offs, cost of each technician or analyst per hour, performance by technician or analyst, overhead allocation, net profit per client or payer, and expenses as a percentage of revenue. So now I've summarized these key metrics in different categories, and we're going to go through them with a little more detail. So first, we're going to look at the accounts receivable metrics, which are lag time in collections and AR aging buckets, as well as write-offs. So I like to call accounts receivable metrics the mother of cash receipts, because if you're not on top of your accounts receivable, you're not going to receive the cash. So it's very important to be looking at these metrics and analyzing them, because if you run out of cash, it will hinder your operations. So the first one we're going to talk about is lag time in collections. So what is it, right? Simply put, it's the number of days it takes to collect money once a claim has been billed. So from point A, that claim going out the window, to point B, the money being in your bank account, how long does it take? Okay. Now, why is it important? Well, planning for cash flow effects and looking at your business model. If you know that you average 28 days from a claim being billed to the money being received, you know that you need to make sure you have those 28 days of money to continue operations before you receive the money. And that's not the only consideration when planning for savings. You should consider other things, but this is one of them, right? So you need to be able to plan to make payroll, because your employees are not going to wait until you collect the money. You know, they have a payroll schedule and you'll pay them abiding by that. And you need to make plans to get money if it's going to take long. Okay, so what factors to consider when looking at this metrics? Well, you want to look at payer specifics. So let's say you, in a simple scenario, you have 2 payers. You have Aetna and you take Blue Cross Blue Shield. Now, Aetna pays you generally in 15 days, while Blue Cross Blue Shield is taking more like 30 days. You're going to want to consider, well, what's my concentration? Don't just average 15 and 30 and say that's your day. No, if 90% of your clients are on Blue Cross Blue Shield, then more likely than not, you're taking 30 days to receive any money, and that's what you should plan for. Okay? When you take a new client, and let's say you take a new client, you take Aetna, you already know that you expect to receive the money in around 15 days. If you haven't, then you know to look into it, or to ask your biller or ask your team what's going on, because the average collection of rent is 15 days, and you've noticed you haven't been paid on your new client and it's been 30 days. Okay. So the next metric is the AR aging buckets. Okay, and what is this? So AR is accounts receivable, and let me discuss it a little bit further in depth, because sometimes people aren't familiar with it. But accounts receivable is simply the detail of money that is owed to you for services you have rendered, right? So accounts receivable is everything you bill out to the insurance company and you're waiting to get back, or you bill a client private pay and you're waiting to be paid. Okay, so it's money owed to you for your services. And the AR aging buckets is taking that money that's owed to you and placing it in particular buckets depending on the age. So how long it's been outstanding. So you can have one bucket that's 0 to 30 days. And this will be our favorite bucket, right? Because we expect most claims not to be paid within the month. So anything in here is probably rather normal. Now, if you're jumping to 30 to 60, and based on your lag time in collections, you don't have payers that pay you in an average time of more than 30 days, then you'll want to start looking at these claims to see what's going on and asking questions about their collection. Okay. So it's important to identify issues with current client insurance policies and potential write-offs, right? Sometimes you call an insurance company and they give you an authorization, or they tell you that no author is required and quote you eligibility and benefits, only to find out that that's not how the claims are being processed and you were malinformed. Now, the Our Agent Bucket will help you identify these particular situations. So what factors to consider when you're looking at this metrics? Well, the average lag time by payer versus bucket analysis, like we just talked about. Having your lag time collections empowers you to know how long before you should be worried that there might be a problem with the money. And you can compare that to the buckets and ask the appropriate questions and follow up in time to ensure you don't lose any money. So the next AR metric is write-offs, right? And what are write-offs? Where it's receivables, money owed to you that was determined uncollectible. And unfortunately, this happens in almost every type of business, not just ABA businesses. Okay. Why is it important? Because of asset valuation. When you are looking at your company, generally an ABA company's largest asset is going to be that accounts receivable balance. And if that balance has amounts that should have been written off, then it's overstated and it's inaccurate. You might expect that you're getting $30,000, but in reality, 10,000 should have been written off, and you're only due around 20,000. Okay, and what factors should you consider? If you're seeing a lot of write-offs, you're going to want to come to an understanding of why it's happening. Maybe it's because you're going over authorized units often, and that will entail that you should set some company policies and procedures to ensure appropriate controls, right? So it could be an administrative person's job to ensure that the schedule of the clients do not go over that of the authorized hours. Or if the problem is that too much of one code versus another code is being billed, the reallocation of employees to make sure that's being met. So that's it for accounts receivable metrics. These are extremely important for your business, extremely important for anybody in the medical field. You need to be on top of the money that's owed to you. You have to understand and have a general knowledge of when you expect to have the money. Expectations are key, because if you have expectations, when they are not met, you will know to ask questions and solve problems faster. So the next set of metrics we're going to look at are direct labor metrics. And these are very important because the largest expense of ABA companies is direct labor, the cost of your therapist and your analysts. So it's important to have metrics to analyze and to identify any particular issues. So the first one I like to look at is cost of each technician or analyst per hour. And some of you might say, well, I know what I pay the technicians. I pay them so and so an hour, and I pay the analyst a salary of whatever it may be. That's fine. But that is not what they actually cost you, right? Because as business owners, we've come to understand that there's lots of expenses related to having employees. It is not just your hourly wage, right? We have payroll taxes, we have workers' comp insurance, we have unemployment funds that we need to fund, several factors, right? So what is it when I say the cost of each technician or analyst per hour? Well, it's the amount you pay each technician or analyst per billable hour they produce. The true cost, not just their hourly rate. So as we know, we pay technicians or analysts hourly rates for indirect unbillable time. If you're having a team meeting, if they had to drive between clients, you're paying them, but you're not making any money, right? If you offer any kind of benefit, any health insurance reimbursement, payment of premiums, 401ks, anything at all those go into the expense of having that therapist or analyst on staff. And then you increase it by all the underlying costs like payroll tax, workers' comp insurance, unemployment funds, etc. And so you want to see the total cost that you have to pay for that employee per month, and you want to divide it by how many billable hours they produced in order to determine what they really cost you per billable hour. And that way you can compare that number to what you're being paid through your contracts to see if it's sufficient. So why is it important? Well, to understand how much direct labor actually costs you. How much does it cost to provide an hour of therapy? It's very important to know if you've accepted a contracted rate, that would imply that you've done some research or have some understanding of what it costs you to produce 1 hour of therapy. Okay, so what factors to consider? The ones I've mentioned several times: payroll taxes, non-billable time, employer-sponsored benefits, and any state requirements. So the next thing we want to look at is performance by technician or analyst. So what is it? It's analyzing the amount of billable versus non-billable hours being produced by a technician or analyst. So this is their production ability. So why is it important? To evaluate employment criteria, cancellations by technicians, analysts, and revenue generators, right? This is particularly important if you have an employee on a salary. And if they are not doing enough billable work, they might not be making enough to cover their salary, and they might be actually costing you money. So the factors to consider is the technician analyst pay structure. If they're paid by the hour and they get paid more for a billable hour than non-billable hour, then you're probably okay. But if you're looking at a salaried BCPA, you're really going to need to look at performance, see what else is she contributing besides billable hours. That's something you have to pay somebody else for. How much would you have to pay somebody else for that? So it's a very important factor for production. So the next type of metrics we're going to consider are overhead metrics, right? And I call overhead the unseen profit eater because people don't seem to consider it at all in their business analysis, and it is a very real expense. So when we're looking at overhead, what I like to look at is overhead allocation. So what is it? It's analyzing the amount of all costs that are not directly related to producing revenue, but necessary to operate your business, then allocating it to billable activities on an appropriate basis. Okay, so what is it? It's not what you're paying the RBTs or the analysts, right? It's what you're spending on, let's say you have a clinic base, on the rent, on the janitors to clean the clinic, on the supplies at the clinic, on the tools used in therapy, everything that you need to run your business, insurance, the telephone expense, the internet expense, all these expenses that don't directly produce revenue, but are required in order to be able to produce revenue. So you want to look at all those expenses and you want to allocate them out on the billable activity. So once you have a total, you can divide by billable hours or whatever allocation base you see fit. So what do I mean by allocation base? I mean, like, for example, if you had clinic and home-based therapy, maybe you don't want to attribute any of the clinic costs to the home-based therapy because they're not directly related. Now, let's say that you do use the clinic space to train and give supplies to the therapists that go do home-based therapy, then you might want to consider allocating some of the clinic costs to that time. So why is it important? Well, it's to understand how much it costs to provide an hour of therapy, right? So there are two components when you're thinking, how much does it cost me to provide 1 hour of ABA therapy? And that's the direct labor of the employees involved in providing that therapy and the overhead, the cost to run your company. And you want to have it on a billable hour measurement to be able to add it to what the employees cost you per billable hour that we would have determined with the metrics we just went over, add those together and then compare that to your contracted rate. Those two numbers together are power. They give you the power to understand how much it costs to produce 1 hour of therapy and then compare it to how much they're paying you and make sure it's enough and that there's somewhat of a profit margin left. So what factors should you consider? Well, you should consider a distinct allocation basis. Maybe you want to just take all the overhead if you've got like a very simple doing home-based therapy, or maybe you want to take all the overhead rates and divide it by billable hours. If you have multiple locations or departments, or you're doing home-based and you're doing clinic-based, or if you have speech therapy, you're gonna want to allocate the overhead out appropriately. So consider make a list of the expenses that you would consider overhead, and then say, does this expense increase or decrease more because of one variable versus another? And if so, that could be your allocation base. So for example, the payroll processing fees that XYZ company pays ADP if they have 2 locations and they have 75% of their employees in one location and 25% in the other, it'd probably be appropriate to allocate those fees from ADP, not 50-50 between locations, but 75% to the one that houses 75% of the employees and 25% to the other location. So next we'll look at profit or loss metrics, which is the bottom line, right? At the end of the day, you want to know, did I have a profit or did I have a loss, and how much? So how do I suggest you look at your profit or loss? I suggest you look at it on a per client or payer basis, depending on your size. If you're small, you can do per client. If you're getting rather large, you might want to look at per payer. So it's analyzing the profit per client or payer or funder. So looking at the total revenue for that client or payer, total expenses, and then looking at the profit. So why is this important? Well, it's important to ensure you're not performing services at a loss or for too little profit. Sometimes you might think, well, I've got a profit, I've got this payer, the contract's not that great, but I do make a profit of about $5 per hour, so I might as well keep doing it. But what happens when you use capacity to make those $5? Now you don't have another therapist to send to a client from a payer that could give you a profit of $20 an hour. So even though you think it makes good business sense to take the $5, not really if you're capping capacity to make 20. Now, of course, the factors to consider is the scale of your operations, right? Depending on whether you're going to analyze per payer or per client, and then ethical considerations, of course, right? I'm not saying drop every client because you're not making any money, but unfortunately, the reality is you need to be able to make money to stay in business. So what you can do is say, well, you know what, this payer's not that great, but it's for needier families, and I really want to help them. You could do an analysis of how much you can afford to shift to that segment without sacrificing the profitability of your company. Because in order for you to keep helping people, you must stay in business. So it's not, you shouldn't feel guilty or like if you're just being a business shark. Maintain your ethical integrity, maintain your ethical considerations. Just do it in a way that ensures that you can stay in business. So the next profit or loss metrics is that you should look at is expenses as a percentage of revenue. So what is it? It's looking at expenses not just as their dollar amounts. I'm not saying I spent $500 on meals this month for the company, but looking at it as a percentage of revenue, right? In order to establish budgets and expectations, this is going to be the best way, because as your revenue grows, your expenses will grow. What you want to make sure is that they're growing proportionally, that none are getting too high as a percentage of revenue, right? So it helps you understand your business model and be able to identify cost cutting measures if necessary, right? So if you set a budget where you say, okay, well, I'm dictating 5% of revenue to office supplies, and you see month over month you're going over, you might want to step back and look at what's being bought. Is it really necessary? Or can we cut cost here or not? Or is there no way to cut cost? An important expense to look at as a percentage of revenue is payroll, right? Payroll can easily, especially as you grow and you get those admin positions and positions that are not directly creating revenue, if that increases your payroll expense too much, there won't be enough profit left to pay the other business expenses, and you can have a trouble. So when you're looking at your expenses as a percentage of revenue, you're going to want to consider industry norms. In the AV industry, what is normal for this percentage? And then factors outside of your control, right? And budgets. So it's always important to have a budget and then be able to compare actuals to the budget to see what happened. A budget is like setting an expectation, and any variances help you identify potential problems or issues that you can deal with. So we've gone through all the key metrics that I wanted to explain to you, and I hope will be of some use to you in analyzing your AP business. The last part is some important considerations, right? For your company. So sit back and think about your company. Do you have multiple revenue streams? What do I mean by that? Are you doing AP, speech, and OT? Okay, multiple revenue streams. Do you have clinic and home base? Multiple revenue streams. Do you have more than one clinic? Multiple revenue streams. Multiple revenue streams are important because you do not want to mix up all their activity, analyze them as one, because they are separate. And if one revenue stream is not profitable, it can be easily covered up by the revenue streams that are profitable. And you might never know that that's not something worth pursuing, or changes need to be made. So, in doing this analysis, in looking at these metrics we talked about, I want you to think about your business. And if it has multiple revenue streams, you want to be able to cut and dice it up and look at these metrics separately in order to properly analyze your business. Okay. So, these metrics will help you with the ability to set budgets for expansion. So, if you have these metrics in place and you're reviewing them, if you have the accounting set up correctly, if you have relevant business data, it's going to be much easier for when it comes time to expand. Perhaps you're doing home based and you say, I want to go do a clinic, or you have a clinic and you want to open a clinic in another location. If you have these metrics, it will make it much easier to budget for that expansion, for your next big step, because you're going to know I need to render around this much revenue. And if I do, it's going to cost me so and so percentage of expenses. And so I need this much money to help me start. Okay. So it's important in looking at all the metrics that there's consistency and upkeep on the ongoing data, right? So as if you assess your sources like we did and you plan for them, you clean them up, you need to make sure there's consistency in the cleanup. If you have somebody doing the accrual accounting, you don't just do it for one time period and then stop, then there's no consistency. The next period you evaluate will be incorrect. So whatever you had to do to clean your data, to get what you needed to look at these metrics, you're going to need to be consistent and make sure it's going on in the future. You also, as you grow and as your business changes, you want to consider potential for new metrics. The ones I talked about today are ones commonly used in my analysis of ABA businesses to help them make decisions and consult them. But there could be new metrics necessary. You always want to consider something to consider is capacity, right? In a particular in a clinic, like what is your total capacity? Am I at capacity? Can I not take any more clients? Okay, well then that ends the growth of this clinic. We need to open a new one, or we stay here comfortably, or we span out in different segments. So these are important considerations for you to take on when you're looking at your data and analyzing your ABE business. So that is it for my presentation. I hope that it was helpful. I hope that it's enabled you to go and look at your business, start thinking about things that are important, know some numbers to ask your accountant for, business consultants to help you make a decision. Again, as I said, my name is Joanna Eddy. I'm a CPA. I own a boutique accounting firm specializing in ABA businesses. And here's my contact information. If you have any questions about the presentation or need any advice, feel free to reach out to me. I've got my website here, my office phone number, and our office address. I also have our Facebook page and our LinkedIn page, which we're posting things on quite actively. So it was a pleasure to speak with you today. And again, I hope this was of some use to you. And I hope you guys have a great day.